Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Currently the Australian dollar holds steady around the key level of 66.30 and with the base holding at 65.8085 should also be noted as it is close to the 60-day moving average. Given the fact that we've got an indecisive candle being a long-legged doji, the market could stage further gains on towards the key level seen at 67.4045. Above there would give further indication to the target of 68 cents. Although the support level is expected to hold around that 65.8085 to 66.30, beneath there would give a significant bearish scenario, so do keep an eye on these levels. Investors are closely eyeing now the Friday's release of the US non-farm payrolls report, which is anticipated to be the most pivotal market event of the week. This report serves as a crucial gauge of the health of the US labour market, providing insight into the overall job growth. Forecasts suggest that the report will indicate the additional of 182,000 jobs, showing improvement from the previous month of 175,000. Unemployment is expected to remain steady at 3.9. The outcome of the non-farm payrolls report will likely play a significant role in shaping expectations regarding the Federal Reserve's monetary policy decision. While the consensus is for the Fed to keep interest rates unchanged at its next policy meeting, there are still lingering expectations of a potential rate cut later in the year, maybe even earlier than September. Nevertheless, do keep an eye on the key data as it will play a significant role. The euro-dollar saw a slight increase on Thursday following the European Central Bank or the ECB's widely anticipated rate decision. As expected, the ECB reduced all three key rates by 25 base points or 0.25%. This adjustment brings the rates of refinancing, margin lending and deposits to 4.25%, 4.5% and 3.75% respectively. The US dollar index, its counterpart, still remains weak and hovers around the 2-month low. As investors await the anticipated job report in the US, the technicals still hold firm for the euro and therefore could see a move on towards 109.25 and higher on towards 109.65.75 or even higher around 110.25.40. With that being said, do be on your guard as profit taking could emerge as we head on towards 110, given the fact that the market has been rallying since around early April of 106 area. So therefore, bullish traders may start unwinding some of their long positions. The support though comes in around 108.65 and the trend line seen around 108. After a bounce, dollar yen seems to be showing a little bit to the weaker side and therefore could see the market drop towards the support level of 155.20 or around 154.5. In the given price action, I still feel there is bearishness to come and therefore should look to the downside with a broader call to the lows of 153 or even lower to 151 to 150. Upside expectations should cap around 156.55 to 65. Sterling still holds to its bullish gains since the market rebounded off the lows of 127 and now looks towards 128.5 as an initial target. Given the fact that the technicals are still somewhat bullish, but there is a little bit of weakness coming through from the technicals, profit taking may emerge beyond there and on towards 129 and above, possibly see bullish traders start unwinding some of their long positions because the market has rallied since 123. Nevertheless, I still anticipate that the broader call will hold towards this region of 130 to 131. Any pullback should find support around the lows of 127. Gold extends its gains after its previous day bounce off that key support level, which is seen around 2,321 to 26. In light of how the market is performing, I'm still a little bit cautious at these levels. Even though I am holding a neutral bias, we could see a rejection from 2,380 and look back towards the bottom side of the range around 2,350 and reassess. Turning to oil, the market still holds its gains since rebounding off that key support level, which is seen around $72.80-90. However, to support a further bullish case, we do need to see a break of 75.5, which would extend the move on towards the $77 to $78. I do like the way this market has rebounded, so let's see if we can clear that 75.5. Otherwise, we could see a fall, if rejected, back towards the bottom side of the range, around $73. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new weekend.